What's up, you guys? Low Stocks Bro here, giving you the update on my options account as I do every Monday through Friday. But today it's going to be a little bit different. Instead of going through and showing you guys my positions on Xpeng and Alibaba and showing you the spreadsheet, showing you what I bought and what I sold, which I can't do that for sure because I didn't buy anything today. All right, I took the day off. But instead of doing the normal routine, I actually want to talk about something that I feel like is very serious and that could really help people in case you are one of the people that clicked on this video because you see your account is red, because you see your account is struggling and you yourself are just struggling in the market, and you know you're beaten down because this market is brutal and has been brutal, especially for the last few months now, basically since the beginning of the year. This video can be really helpful and really informative to you. So let's knock my account out of the way first. The account currently is sitting at $19,936. We are officially under the $20,000 mark, but Alibaba was also officially today under $230. So, you know, my account and Alibaba go hand in hand since it is my largest position. Down $2,038 today. And I mean, it's really been the same thing over and over again. Again, at the bottom of the day, we were down almost 3,000 and we recovered slightly, another $1,000, and then went sideways from there. I mean, it's pretty much been the same thing. If you guys been watching the previous videos, it's the same thing. Take a huge hit, recover a little bit, and then go sideways. So yeah, it's pretty boring, pretty repetitive. So instead of just giving you guys the same thing over and over and over again, I want to dedicate this video to help those that are in need. So let's get straight to it. So you might look at your account, you might look at the stock market and ask yourself, why? Why is everything so red? Why is everything so devastating this year? Why aren't things like last year in 2020 where everything was just going up? Why? Why? Well, there's two reasons, okay? I'm going to break this down and I'm not going to hold back. I'm going to give it to you guys the way it is because that's the way the stock market works. Stock market doesn't care about your feelings. And so when I explain the stock market, I also won't care about your feelings, okay? The two reasons there's so much pain in the market and there's so many accounts in the red are greed and ignorance, okay? The greed comes from a whole bunch of new investors that got into the market in 2020 because they saw it was going nothing but up and they wanted their piece of that cake. The ignorance comes from those investors being completely new, never have had any experience in the market, and on top of that, they were not at all interested in learning how to do things the right way. They just wanted to make as much money as they possibly could. That's where the ignorance comes in. And when you combine those two things, that's when you get an account that's down 50%. And, you know, again, I'm going to be real with you. If your account right now is down 50% from where you started, not from your all-time highs, from where you started, if it's down 50% or more, you were greedy, you were ignorant. I mean, it's the only way. It's the only way that could happen. So, I mean, let's just take a look at some of these stocks, guys. Let's take a look at NIO. NIO was a big favorite among retail traders. And for those of you who don't know, retail traders are just regular people, not big institutions or anything like that. Regular people. Among regular people, NIO was a big favorite. Okay? NIO, at its peak, was worth $62 per share. Okay? $62 per share. If you bought NIO at $62 per share, your greed comes from seeing that, well, it used to be worth 4 and now it's worth 60, so I'm going to buy it here and write it to 100. Your ignorance comes in the part of not understanding how valuations work, okay? At some point, you know, in the short term, stocks can do whatever they want to do. NIO could have gone to 1,000. Look at GameStop. GameStop went to 300. But over time, at some point, the valuation of the company will match the stock price, okay? What the company is worth, the stock price over time will reflect that value. And so what is happening now? A lot of people are getting killed. A lot of short-term traders literally got killed out of market. With the recent correction that happened, they got obliterated out of the market. All right. And a lot of people, especially seeing that, you know, man, these stocks are not recovering the way I thought they were. A lot of people making a lot of short-term risky trades are continuously slowly getting grinded out of the market as well. And so what you're left with is a lot of the people who know what they're doing, a lot of the old timers, a lot of the people that have more experience and that, you know, have the capital to hold their positions. They're not selling out. They're not paper handing. They're left in the market and they see a Neo and they're like, I'm not paying $60 for that. Okay, Neo drops to 50. I'm not paying $50 for that. Okay, Neo drops to 40. I'm not paying $40 for that. Why? Because the stock in the short term was highly overvalued. It was all hype. It was all hype, guys. I mean, that's just what it was. It was hype, greed, and ignorance. Hype, greed, and ignorance. That's what caused these inflated prices. Neo at around where is that right now? $36. That's a more reasonable. That's a more reasonable price. That's why you've seen a support build at around that price, because at that price is finally when the millionaires and all the big funds start to look at Neo and be like, okay, you know, I'll pay 30 for Neo. I'll pay 30 for Neo. But you know that's what happens. So I mean, let's take a look at another one. Another one that's gotten super beat up. Super beat up. Which one? CCIV. Oh my goodness. CCIV is so much worse than Neo because Neo is an EV company that is actually established in China. Okay, it's actually selling cars. It sold, I think, its 100,000th car not too long ago. CCIV is a pure speculation play. I mean, they have not sold not even one car yet. This is Lucid that we're talking about. So if we check the chart, guys, at the high, you know, people were paying $58 for this stock. $58. What happened? Again, the correction happened. A lot of people got killed. And, you know, the correction happened for various reasons. One of them, the main one being the rotation and also bond yields going up. But, you know, I don't want to make this too complicated for people who are newer to the stock market. Just know that something happened in the market that caused a lot of these high speculation, high value, high growth, hype stocks to come down hard. And when it came down hard, a lot of people got blasted out of the market because they had way too much money in there in those positions, and those are the only positions they had because, again, they were just in the market for pure hype and pure profit and greed. So when these stocks came down, they got blasted out of the market. And so they got blasted out of the market, and when you're supposed to recover, what happens is, okay, it tries to recover, but the millionaires and the big funds that are left in the market are saying, I'm not paying $56 for Churchill Capital. I'm not even paying 40. I'm not even paying 30. And honestly, I'm not even paying 20 for it. Why? Because it's not how much money is it made? What are its profits? What are its revenues? It has none. Has it sold even one single car? It hasn't. Okay? I mean, you know, it's just what it is. How valuable actually is this company? Do you guys know? Do you guys have any idea? Do you guys have any idea on how to calculate that, how to tell? A lot of people don't. A lot of the people who own this stock and were buying, I could tell you right now, more than 90% of the people that were buying Churchill Capital in the 50s had no idea what they were buying. They had no idea how to tell if they were getting a good deal or not. And obviously, they were not getting a good deal at all, because if they bought in the 50s right now, those people are like dead in the water. They're fried. They're toast. They are toast. They bought at $58 per share, and right now it's trading at $18 per share. Okay? I mean, that's just what ends up happening. The only way to explain something like that, greed, hype, ignorance. All right, that's what it is. You know, we can go on through many more examples, but I think you guys get the point. Now, there is one last thing that I want to mention, and it's about your mentality in the stock market, your investing mentality, your trading mentality. And this is one of the things that I literally hate the most about new people who enter the stock market, that they usually come in with a short-term mentality. Okay, they don't come in to invest. They don't come in to, you know, enjoy the ride and tag along for the ride. They come in to buy real quick, sell, make $20. You know, they want to make a few $100s a week. They want to be traders. They want to just, you know, they want to just try and somehow take advantage of the market and you know, play the market and you know, read these charts and do this technical analysis and just make short-term profits off of the market. Just, you know, they're cool with making $100-200 a day or a week. And that's just not the mentality to have in the market, guys. The market, and I keep preaching this, I preach this all the time on my channel, the market is a long-term game. If you come in for short-term profits, at some point you're going to get smoked. At some point you're going to get smoked because it just doesn't work like that, all right? The market does not work like that. And Another thing actually that I just, I knew about this, but I had forgotten about it until just now. Very, very important, guys. The market is not a one for all for one, holding hands, kumbaya. And I think some people have that confused. The market is a jungle where there are lions and there are deer or whatever it is that lions eat all the time. When you come to this market and you make $100, you're taking that $100 from somebody. The money's not coming out of nowhere. If I make $1,000 in the market, that means somebody had to have lost 1,000. I took that money. When in the stock market, you take money from people. That's what it is. That's what it's all about. It's actually a really sick place. It's a sick, bloody place. When all those people that made the money from GameStop, all those people that made thousands and thousands from GameStop, who do you think they took it from? They took it from the hedge funds that were shorting GameStop. The money didn't come out of nowhere. They stole that money from the hedge funds. I mean, they didn't steal it. They took it. They took it from the hedge funds. The hedge funds, those hedge funds lost billions. And now what's happening? Think about it. What's happening now? With all these hype stocks, all these fan favorite retail stocks that are getting completely killed, people are losing a lot of money. People are losing thousands of dollars. But who's taking it? Where's their money going? Their money is going to the millionaires and those same hedge funds that are buying and scooping these stocks up at very, very low prices from people who are just getting killed and are forced to sell because of margin, or they sell because they just see so much red in their account they can't take it. So in a way, yeah, the hedge funds did get screwed by GameStop, but right now they're taking all their money back with interest, okay? With interest. I mean that's just what the stock market is, guys. You know, it's a bloodbath. You take money from those who are too impatient and too ignorant to know any better. And you know, it's sad and it sucks, but there's enough money for everyone in the stock market, because in a certain way, these companies create value. Money is value. And if you're in good companies that create value, all you have to do is tag along for the ride. And over the long run, there could be enough money for everyone. But people don't want to go that route. They just want to make short-term plays, make short-term profits, and jump onto hype trains. I mean, look at Doge. I'm not even going to get to Doge in this video. I might make a whole separate video about Doge. But Doge is a good example of what I'm talking about. But yeah, that's it for this video, guys. I want to try and keep this under 10 minutes. It's probably no longer under 10 minutes, but that's fine. I hope, if you are one of those people with your account that's really, really red, that, you don't just get offended by this video. I just come to tell you the truth, my friend. It's the truth. I don't need to hate on you. I don't need to criticize you or anything. Your account speaks for itself, okay? Your account will tell you over time, have you been doing the right things or not? I'm just here to explain to you what it is that you've been doing wrong, so maybe hopefully you can change it. But that's it, guys. We'll catch you tomorrow. Hopefully tomorrow's a better day. If not, oh well, it's okay. That's what the market's all about. And if it is, then cool. Hopefully you guys aren't stressing too much over that. If you are stressing, you need to make some changes. But yeah, that's it for me. Peace.